Welcome back to Investing and Trading Live, sponsored by Trading Academy. Once again, I am your host, Josh Lilquist. On the last segment, we covered some topics and concepts on how to use these markets for extra income strategies, how to do that safely, how to do it smartly, but how to follow those banks, institutions, how to have a strategy that's designed to do what they do, and then when they do it as well. And we had a lot of people texting into these investing classes that we do right here at the Academy. Simply just text the word investing, and that's going to be to the number 210. And that'll be for 2 seats for a trading and investing class, one for you and one for a friend. Text investing to the number 210, or you can go to investingandtradinglive.com, and you can pick your own time and date there. So on the last segment, Al, when we did talk about those income strategies, how you actually build wealth and build your retirement, it's those extra income strategies. Right. And that's why it's so important to have multiple streams like you were talking about. Now, we have a lot of listeners, Al, that have those retirement accounts, and they've been coming to these investing classes, and they're like, hey, I've done well. I've had either 1 or 2 or sometimes 3 sources of income, and they have built some sort of retirement. But there's 2 camps, though. One camp is they've done that, but they still don't have enough.
Right.
And they need to continue to build that. The other camp is, hey, I think I'm good. I think I have enough, and I really want to protect it and not have to use it all so I can leave a legacy for my family at one point. So we're seeing a couple different camps coming into these trading and investing classes. So with that, what are some of the things that you help people do that are concerned about retirement? You know, whether it's they can retire or the timing of they retire or having enough. What are some of the things that you're helping people with to bridge that gap and having the comfort going into retirement, knowing and feeling secure about that retirement?
Yeah, I think everybody should look at their retirement as unique to them. How do you want to live in retirement? What do you want to do? Do you want to travel? Do you want to buy a Ferrari? Do you want to buy a yacht? You want to just lay on a beach somewhere? You want to do nothing? It's going to vary from person to person. So number one, I think you should figure out what your retirement should look like, what you want your retirement to look like, not what Wall Street tells you you can retire with. You know, they might put together a plan for you based on certain market returns and the amount of money you have now, and then you have to adjust your lifestyle based on the numbers that they show you. Well, what we would rather do is have you tell us what your lifestyle is going to look like, what you want it to look like. What are your goals in retirement? Instead of cutting out things, what do you want to add to your lifestyle in retirement? And then let's work from there forward, figure out what you need, what rate of return you need to be able to do that, and to even see if you can do that. But here is a number of things to consider here. You mentioned kind of 2 groups. One's a group that doesn't have enough or is concerned about having enough. Another group that does have enough. That group that has enough, we've seen periods of time where there were a lot of people that felt very comfortable. All of a sudden, the market took that away from them. In the year 2000, people sometimes lost. Well, we had a 50% drawdown in the S&P 500. A lot of people lost 40 to 60% of what they had worked hard for. Happened again in 2008, from 2007 to the beginning of 2009.
Well, let me ask you this, though, Al. The majority of the people listening right now, my guess anyway, probably didn't experience that. Right. So the problem is if they've never experienced that, they don't know what that's like. No. And you know what they'll say? Oh, that won't happen to me.
You're right. Yeah.
You know what I mean?
Do you think that the people that lost money in 2000 or 2007 thought they were going to lose it?
Exactly. So I would encourage people, go talk to somebody that maybe is a little bit older and ask them what that was like, because you don't want to go down that path.
Well, here's a concern. A lot of the financial advisors that are in the business now never went through that kind of a market either. So they haven't actually experienced major bear markets like that.
Correct.
So it really becomes now we're getting back to the protection part of it, the manage your capital part of it, so that doesn't happen to you. The number one thing that we teach our students, that we really emphasize, is how to do that, to make sure you never have a big loss. Peter Lynch, who ran the Magellan Fund, we've quoted him several times, but he said this, quote, "You have to say to yourself, if I'm right, how much am I going to make? And if I'm wrong, how much am I going to lose?" Unquote. Well, that's the reward to risk, and that's one of the things that we work on with our students too, how to make sure that when you're right, you are making more than you are losing if you're wrong. And that's part of that management. But here's something to consider. Going forward, I mean, we've kind of become a little complacent, and I'm going to say spoiled with the returns that people have achieved over the last few years. It's been way out of the norm. The average return, I think, over the last maybe 3 or 4 years has been about 13%. That's way ahead of average. Goldman Sachs just came out with a report. They said over the next decade, that's the next 10 years, Josh, that we can expect to have about 3% annually in returns. If you have a 3% return with inflation that's around 3%, and you have fees on top of that, the numbers don't work out very well for you. They also said that there's a 72% chance that the S&P underperforms Treasury bonds, a 33% chance that equities return less than inflation. So the next 10 years could be a real challenge unless you know how to use assets and have strategies that can outperform those numbers.
So basically what that tells you is be prepared.
You have to be prepared, exactly.
And not that they're going to be right. They could be. They could be totally wrong.
Absolutely.
But can you prepare for both situations? Heck yeah, you can.
Yeah. Yeah.
And why wouldn't you? Right? And that's the most important thing I think most people just don't do is people don't plan. People don't be prepared. And I ask that question when I teach a lot of those workshops too. I say, why do most people struggle financially, even if they're doing very good, very well with their careers, make, decent money?
Mm-hmm.
And one of the first things that people say is, well, people don't plan. They spend everything they have.
Yeah, that's true. And when we talk about jobs, people say, "Well, I have a good job. I get a raise every year." Remember, in most cases, that raise is just going to help you to combat inflation. It's not necessarily going to get you to a point where you can create wealth.
Look at the percent of the raise; it's probably close to what inflation is.
Or less than that. Yeah, in fact that has happened. The salary increases have not kept up with inflation.
We mean Social Security had a great increase, didn't they?
Hey, Social Security.
It was a joke, by the way, right?
I understand that, but also consider the fact that Social Security is pretty much broke, and by the mid 2030s, as of right now, unless something significant happens, only about 75% of the benefits are going to be able to be paid out. But here's what this I thought was really kind of scary. This was a Go Banking Rate study. They found that a person will need $2.5 million in retirement savings to spend $100,000 a year if you use that 4% withdrawal rate. And for a lot of people, $100,000 is not a lot of money right now. That's not going to maintain a huge lifestyle. But if you want $100,000 a year, you need $2.5 million in retirement savings. With the amount of retirement savings, if you add Social Security, because you mentioned that, so people are saying, wait a second, I'm going to get all this money from Social Security.
Well, it's not much. The average is terrible.
Yeah, if you even look at the high end of average, around $21,000, then the amount of money you need to make $100,000 a year isn't $2.5 million. It goes all the way down to $1,965,000.
But that Social Security increase, just as I Googled it, it was 3.2%. That's pretty good, right?
No.
Oh, my math might be wrong then.
Yeah, I would say so. So whatever you have in retirement, it has to outpace inflation. It has to outpace any fees that you're making, and you're probably not going to do that with the fixed income assets that people use. If Goldman Sachs is right and we have a 3% annual return over the next 10 years, and by the way, we've gone through many periods like that where we've gone through 10, 15 year periods where there has been no gain in the market. If that happens, a lot of people are going to find themselves far short of what they need to live the retirement lifestyle that they want.
Yeah, according to the SSA.gov, unfortunately, the Social Security increase is going to decrease to 2.5 in 2025. So that's what they say. So I would encourage, if you're listening right now and you're hoping to get by in retirement time on Social Security, it might be advantageous to look at different opportunities.
Right.
Not saying you need to, not saying you have to, but it might make a little bit of sense. And who knows, trading or investing, it may not even be for you. But wouldn't it be nice to find out? Wouldn't it be nice to know what your options are? What can you do to plan and prepare for retirement? What can you do to protect those assets that you do have? and hopefully not just have to draw those down and then have them disappear at one point. If you have goals or aspirations of leaving a legacy for your family, that might be a potential opportunity. So I want to invite you to an investing and trading class that we do here at the Academy and all across the Metro. These classes are only about 2 hours long to introduce you to these techniques and concepts on the financial markets. And these are classes where we've taught thousands, just like you, are many strategies which are designed to teach you to make smarter investing decisions. So text the word investing right now to the number 210-210 for 2 seats for an investing class. That's one for you and one for a friend. Or go to investingandtradinglive.com and you can pick your own seat there. So text investing to the number 210-210 or go to investingandtradinglive.com. We got a lot more to discuss. One more segment here. This is Josh and Al, Investing and Trading Live. We will be right back. So we will continue live on the YouTube. Anything Pacific you want to talk about on the next one there, Al?
Maybe we should kind of end. This is number 4 coming up?
Yep.
Yeah, on a positive note.
What's your positive note?
Well, the opportunities, the ability to have the knowledge to be able to do this.
We can do that. And I want to talk a little bit about earnings this week. It's actually a blockbuster week for earnings. Microsoft, Meta, Coinbase, Carvana, Roku, Starbucks, Etsy, that's all Wednesday. Thursday, Amazon, Apple, Intel. Yeah. And I couldn't pull Friday up for some reason. So we'll talk about the opportunities, like you said. Alrighty. All right, here we go. Segmente numero 4. All right. What were we going to talk about again? I forgot what you said.
Just some positive.
So football, basketball, basketball's back. All right, here we go. Welcome back to Investing and Trading Live, sponsored by Trading Academy. Once again, I am your host, Josh Lilquist. On the last segment, covered some retirement strategies, retirement techniques for a couple different camps. People that have had great careers, have built up these retirement accounts, but they feel like they still might need to build those to have enough to retire. And also that camp that has enough, that feel like they do have enough, but they just want to protect that and be able to leave a legacy for their families. So there's different strategies and different assets that would be designed for both of those camps. And we had a lot of people texting into those investing classes that we have here at the Academy. We have these classes strictly on retirement strategies right here at the Academy and across the Metro as well. So we're coming to a neighborhood near you. We have multiple locations all across the Metro to help people make smarter investing decisions in those retirement accounts, whether they're 401ks or IRAs or whatever those retirement accounts are. Simply to come into one of these classes, just text the word investing, and that's going to be to the number 210-210. That's for one for you and a friend. That's for 2 seats, Al. Did you know that?
What a deal.
Now you know. Text investing to the number 210-210 or go to investingandtradinglive.com, and you can pick your own date there and your seats as well. And when you do text that investing to the number 210-210, you're actually going to get a text right back with a link to our landing page. So make sure to click that link and pick your own seats there. Also, follow and subscribe to the podcast wherever you listen to podcasts, Apple Podcasts, iHeartRadio, and Spotify. Just type in Investing and Trading Live. and you can check out some of the outtakes there. You can also check out the outtakes on the YouTube stream. We do that live every single week as well. Just go to Josh Lilquist on YouTube. So with this segment here, Al, there is a lot of great opportunities right now with these markets.
Right.
Especially this past week. You know, we've talked a little bit about futures. We've talked a little bit about Forex. Not a whole lot about options yet here today. We talked a little bit about stocks. And stocks and options, over the time when there's great volatility, show great opportunities. And you look at Wednesday. Earnings there's some blockbuster earnings this week. You had Microsoft on Wednesday, Meta, which is formerly known as Facebook, not Prince, formerly known as, I forget it's formerly known as. Anyways, you have Coinbase,
couple things.
You have Carvana, you had Roku, Starbucks, Etsy, all on Wednesday. Thursday, Amazon, Apple, and Intel. So some bigger names that had earnings this week, and really the opportunities that come out of there, it's great. One of the things that we want everybody to understand that earnings, it's whatever the earnings says it's going to do, whether they're forecasting it to be good or bad, and then if it's good or bad, it doesn't matter. It doesn't always reflect exactly to the market. Now, the market's going to decide that.
Right.
Now, with these opportunities during earnings, there's volatility that is created there, which is actually really good for options. Matter of fact, the strategy that you were alluding to that Buffett does year after year is an option strategy,
right.
And you want volatility with that. So with all these opportunities every single week, every single month, people are missing out on that. I want you to discuss and just really help our listeners be more comfortable taking action with these great opportunities.
Yeah, taking action. I think the first step, though, if you're going to take action, is to know what the action is that you're going to be taking. The education is there. The knowledge is there. If you are willing to put the effort into learning it. Once you learn how the markets function, what moves price, you have to then develop this skill level to be able to identify, accurately where that's going to take place.
And we covered that in the first segment, right?
We covered that in the first segment. That's one of the things that we do. But just remember, it doesn't make any difference what direction the market is going. It can go three directions. Every direction has opportunities. So you don't have to sit on the sidelines if you think the market's going to go down. In fact, if you do, you're missing out on one of the best opportunities there. So if you are right 1 out of 3 times compared to 3 out of 3 times, if one person's right 1 out of 3 times, another person's right 3 out of 3 times, or has the opportunity to be right 3 out of 3, who's typically going to do better?
The odds and probabilities
favor
that.
The 3 out of 3. You have to put the odds in your favor. That means benefiting when the market's going up, benefiting when the market's going down, and when it's sideways. But when I say that, I mean potentially benefiting. No one's going to be right 100% of the time. Understand that.
Correct. And just think of it as it's the World Series that's going on, right? We have World Series that started last week. And you got a team that, let's just say you got 5 hitters that go 3 for 3, and the other team has 5 hitters that go 1 for 3. Who is most likely going to win? It's the same concept in anything, in sports and everyday life. When you add odds and probabilities, that changes the game a little bit now, doesn't it? So, go ahead.
Yeah, no, I'm just going to say the people that are truly successful out there, they're not necessarily geniuses. You don't have to be exceptionally smart to do this, but you do have to have the odds in your favor. You have to have an edge which puts those odds in your favor. Yep. That's one of our goals for each student is to develop those odds
so
or the edges.
With these market movers this past week, Wednesday and Thursday, with these big companies, Amazon, Apple, some of these higher priced stocks, how do people actually get involved with these higher priced stocks if they don't have the money?
That's a great point. A lot of people just sit on the sidelines then and watch other people make money. Well, there are ways of benefiting. You don't have to actually own a stock to benefit from it. There are assets that you can use that are a fraction of the cost of a stock, as a single share of stock, that allow you to participate in companies like Apple or Tesla or NVIDIA. Some companies out there, their share prices are $800,000-$900,000 a share. That keeps a lot of people out of participating in those companies. They may be great companies, but you still have the opportunity if you learn the strategies that allow you to take a smaller amount of money and still benefit from those larger priced assets.
So that brings more opportunity for people that, have smaller accounts, say 10, 15,000 bucks, that
Right.
it brings more opportunity. And the great thing about that is you're not using the whole 10,000 bucks, the whole 15. You may use 1,500 bucks of that.
That's correct.
And that is how you minimize your risk as well.
Yep.
That's how you manage, like you kick the show off, is managing that capital properly.
Yeah, and it is not just for people that don't have a lot of money, but for people that have a lot of money but are reluctant to put a lot of it into the financial markets.
Correct.
You can start with a small amount, still have the opportunity for outsized returns, and actually reduce the risk level by using some of these assets.
Yeah, and you were talking a little bit earlier about missing the party or not taking advantage of these opportunities.
Right. Mm-hmm.
And, I was thinking a little bit earlier about, we talking about poor. Poor is not actually monetary. People think, oh, I'm poor, I don't have enough money. Well, it's actually not. It's actually POOR stands for passing over opportunities regularly. Mm-hmm. And think about it this way. We're going to have some holidays coming up. Now, say you have a holiday party coming up and it's noon to 4. And you go, you know what? I'll get at this party a little bit later, and I'll just get there at 5, right? Well, you think that you probably missed. By the time you get there, you missed the whole party, you missed all the food, all the benefit, and then you're like, oh, I wish I would have came earlier. That's what a lot of people do in the markets. They wait and wish they would have done something earlier. How do you help people in about 30 seconds? How do you help people take that action?
Well, I think it's looking at time. A lot of people say, well, this isn't the right time to do it. I'll wait until I get all my ducks in order. You may never have that best time. There never is going to be an ideal time. Life always gets in the way. You have to make the effort to step forward. Every successful person out there did that. They didn't sit back and think about doing something later. They actually took action. And taking action comfortably and confidently might mean doing it with somebody who can help you, who's there to guide you and mentor you and support you. Mm-hmm. That's what we do. One of the things that sets us apart is we not only provide the knowledge and the skills to use the knowledge, or building the skills to use the knowledge, but we're also there to support and guide you on on your financial path.
That was almost a tip of the week, but we'll save that for a little bit later. Yeah. But there's a lot of listeners that really are itching to get started. And I know you have investing classes that you're teaching this coming week here. I think I taught 4 the past week and a half here, so we've had a good time teaching these, and hopefully we inspire people to actually take action. So I want to do one last giveaway to these investing classes. Simply to come into one of these trading and investing classes, just text the word investing to the number 210-210. That'll be for 2 seats for a trading and investing class here at the Academy. When you text that number 210-210, you text investing to that, you're going to get a text right back with a link to our landing page, and then you can pick your own date there. Al, you had some good words of wisdom there, but let's hear today's OTA, tip of the week.
Josh, some people want different things to happen. Some people wish different things would happen. Successful people make different things happen. So if you and your family's financial security has a high level of importance and you want to make that security happen for them, make this the time you decide not to follow the herd, not to be average, but the time you decide to take advantage of your potential and the opportunities, I should say, that are currently being presented to us. At the Trading Academy, we'd be honored to help you make that happen, but it's up to you to take that first step.
And sometimes that first step is tough. I totally get it. When I wanted to start playing guitar, it took me a little while to get started, but once I started playing, I'm still going to lessons, and I can actually play a couple tunes out, and that's the same thing with trading and investing. Once you take that first step, take that second, and then take that third. Text investing to the number 210-210 for 2 seats for an investing class right here at the Academy, or go to Investing and Trading Live. Make sure to follow the podcast wherever you listen to your podcast. We're trying to make this the global #1 podcast in the financial markets. Just go to Investing and Trading Live wherever you listen to your podcast, Apple Podcasts, iHeartRadio, and Spotify. or go to investingandtradinglive.com. A couple things to watch out for next week. You got earnings, you got Peloton, you have Cleveland Cliffs, you got Hims, you got Winds Resorts. So a couple of earnings companies coming up this next week. As always, same time, same place next week. Until then, retire young, my friends.